Welcome back to Golden Rule Radio, a weekly summation of the precious metals markets for the purpose of protecting families and their portfolios in these uncertain times. We focus each week on what's happening in the markets related to the metals and the news that moves those markets. And there is a lot of action this week, and we're going to start with the Fed rate increase. The FOMC announcement today that the quarter point rate increase as expected and what we've discussed in previous shows actually is occurring. We now are at 1%, between 1 and 1.25%. Miles, what's your initial reaction?
Well, I know a month or so ago we talked on the show about how they hadn't quite decided yet what they were going to do with rates, or at least they were starting to lean actually towards keeping them the same. So with the way the Dow Jones has been rising, the US dollar's been falling, gold's been up over the last month or two, it doesn't shock me at all that we're seeing a rate increase. And certainly if you were watching market action this morning, with all of those markets being up, it shouldn't have shocked you at all that the rates came up.
No, I don't think so either. But I do believe that we will be shocked if we see another one this year. There's been too many downward pressures on inflation. And so they're being honest. And I think that we can pretty much say that this may be the last one of the year. Who knows? But keep in mind, this is now the fourth rate increase in this cycle. All previous three increases in this cycle have resulted in a bottom in the gold price. So will this time be any different? We don't know. But if it does break out to new highs, as last week's chart showed, you know, it should take out the weekly chart downtrend line that Miles put up on last week's show. So let's transition a little bit into the precious metals.
As we showed last week in the chart, we've hit that bottom trend line 3 times now. We are nowhere near it. So the question, of course, is this rate hike going to cause that drop in the gold price that we're always hoping for, buying opportunity anytime you see a drop in the price? Also, though, here just a couple days ago, we put in a second top just under 1,300. Maybe we push right past it. I mean, looking at how the gold market responded today, was up this morning in anticipation of a rate hike. Rate hike happens. Yeah. Right. And what does it do? It turns around and drops right back down.
And this being that fourth rate hike, let's see if it breaks above. And silver was up over 2%, 2.25% this morning, again in anticipation. It erased part of the gains, but not all. We did see the ratio come down a little bit. And speaking of ratios, the platinum to palladium ratio, I know we have been screaming from the rooftops here in recent weeks about buying platinum, and we're going to put up a chart and show you why. So looking at the platinum to palladium ratio, historically, we've only seen these levels one other time, and that was in the late 90s, early 2000s. And so I can't stress enough to you the importance. Yes, palladium has been the better performer, but that is what has brought them almost to parity in terms of their price. Again, that's forming a market top. And yet again, with that ratio, we're telling you, you will pick up free ounces of palladium if you enter into the platinum market right now.
And the price comparison to platinum, okay, platinum's cheaper than gold, which is nuts.
By 25%, it's major value.
Palladium is almost the price of platinum. I mean, within what, a few dollars now at this point? Within the price of platinum. So to be at a 5-to-1 price ratio a number of years ago, and we did a lot of this with our clients, especially in retirement accounts, believe it or not, you can even put things like platinum and palladium in your IRAs. And we did that for a lot of our clients 6-7 years ago when that ratio was 5-to-1. Well, now we're coming out of that palladium and going into platinum at 1-to-1. It's at parity. How often does that happen?
Well, like I said, one other time. So what about the other markets moving in relation to the Fed rate hike?
Not a lot of move in the Dow up or down today, either prior to, during, or following the rate hike. So the Dow, again, in my opinion, from last week, seems to be putting in what I would argue is very likely a high, and a high that could end up being the high for quite a while here. There's the old adage in brokerage, sell in May and go away. It's now June. So I don't see a lot of investment money coming into the stock market right now. People are spending their money on other things, gas for trips, vacations, things like that. I'm still arguing the Dow is due anywhere from a 6 to 16% correction at this point. And that's healthy. You know, that's the type of correction that isn't 2009, 2010 over again. That's just the type of correction that a market that isn't so heavily bank invested, heavily manipulated like the Dow is, that's just something that needs to happen just to shake out some of the garbage investment that's in there.
All right, so what about the S&P and NASDAQ? Are they going to follow suit?
S&P and NASDAQ both did take a dive, unlike the Dow. Granted, it may have to do with the makeup of stocks that are in those indexes compared to the Dow Jones. S&P is down 0.5% today. I believe if it continues down, we're going to see sub 2,400 levels. Again, the S&P and the NASDAQ have done nothing but go up while the Dow has just sat stagnant. So they're both due a correction. They're both sitting on divergence. There's a bunch of technical reasons why we should see it, even just something healthy. We're not talking panic. We're just talking healthy. Sub 2,400 makes a lot of sense on the S&P. And if it continues down, perhaps as much as 2,200. NASDAQ, same story. Now, the NASDAQ, on the other hand, has started to show some weakness, down 3.25% from the top, pushed down a little bit more today, and same story. If it continues down, 55.60, 55.70 on an interim move.
All right, and talking about stagnation, I mean, the U.S. dollar is stagnant too. Whether it was the anticipation of the rate hike or the expectation of the rate hike, the dollar really was unchanged. I mean, it bounced, 96.9 to 97.02 or something. But again, we're seeing with the metals and with the U.S. dollar, all of that was already priced in, so not a whole lot of action there. So in terms of this week's recommendations, again, our strategies are sound. We've been doing ratio trading and premium swapping for over 35 years, really an industry leader and pioneer in that regard. So we would love to go over your personal portfolio, see what your starting point is, and if you haven't stepped into the precious metals, we will get you established correctly on the front end so that your portfolio is dynamic and able to be strategically placed for free ounce gains in the future. So our recommendations really haven't changed. White metals right now, and the double eagles market has a ton of upside potential. If you're willing to look at the premiums and get in at a low point and sell at a high point in the premium market, you will pick up free ounces. And again, that's what we have tracked and followed for years.
We do spend a lot of time looking at the dollar price of metals. I mean, that's sort of the purpose of the podcast. But the reality is you should be concerned with the quantity of ounces you own. And anytime you can increase the number of ounces you own without taking your wallet out of your back pocket, that's a win for me.
That's right. We don't look at price. We look at relative price and value.
Tori, real quick, before we sign off, I encourage all of the listeners to click on the video on the screen now. We have finalized Don and David McAlvany's upcoming tour for later this summer. We'd love to see you at one of the 6 stops we've got coming up. So go check that out. If you're in any of those cities or around them, definitely sign up and come out and spend some time with us.
Great opportunity. We missed Robert today, but on behalf of you, Miles, this is Tori signing off of Golden Rule Radio. We appreciate you following us on Twitter at ICA Gold. Please subscribe to us by clicking the subscribe button below this video as well.
And thanks for listening. We'll see you next time.